Comprehensive analysis of Coeur Mining, a prominent player in the precious metals mining industry. Coeur Mining, headquartered in Chicago, Illinois, is a U.S.-based company specializing in the exploration, development, and operation of precious metals mines, primarily gold and silver. Its operations span multiple jurisdictions, with key assets in the United States, Canada, and Mexico. The company's portfolio includes 5 major operating mines: Palmarejo, Mexico; Rochester, Nevada, USA; Kensington, Alaska, USA; Wharf, South Dakota, USA; and Silvertip, British Columbia, Canada. These mines collectively produce gold and silver, with some secondary production of zinc and lead at Silvertip. Coeur's business model emphasizes operational efficiency, resource expansion through exploration, and strategic acquisitions to bolster its production capacity. The company operates in the highly cyclical mining sector, where performance is influenced by commodity prices, operational costs, and regulatory environments. By sector, Coeur's activities can be segmented into gold and silver mining, with distinct operational characteristics. The Palmarejo mine in Mexico is a flagship operation, producing both gold and silver through underground mining, with a focus on high-grade deposits. In 2024, Palmarejo contributed approximately 30% of Coeur's total gold production and 50% of its silver output, driven by its consistent ore grades and cost-effective operations. The Rochester mine in Nevada, a large-scale open-pit operation, is a primary silver producer, accounting for nearly 40% of Coeur's silver production but with lower gold output due to its mineral composition. Kensington and Wharf focus predominantly on gold, with Kensington's underground mining yielding high-grade gold and Wharf's open-pit operations offering lower-cost production. Silvertip, a smaller operation, diversifies Coeur's portfolio by producing silver, zinc, and lead, though its contribution to overall revenue remains modest due to operational challenges. The positive aspects of Coeur Mining's operations are multifaceted. First, the company benefits from a diversified asset base across stable jurisdictions, reducing geopolitical risk compared to peers operating in less stable regions. The United States and Canada, where most of Coeur's assets are located, offer robust legal frameworks and predictable regulatory environments. Second, Coeur has demonstrated resilience in managing commodity price volatility, with a 2025 guidance of 400,000 ounces of gold and 18 million ounces of silver, reflecting stable production targets. Third, recent capital investments, particularly the Rochester expansion completed in 2024, have enhanced production capacity, with the mine expected to achieve a 30% increase in silver output over the next 5 years. Finally, Coeur's exploration program, with a 2024 budget of $40 million, has yielded promising results, notably at Palmarejo, where new high-grade zones have extended the mine's life. However, significant negative aspects warrant scrutiny. Coeur's financial performance is highly sensitive to fluctuations in gold and silver prices, which are subject to macroeconomic factors such as inflation, interest rates, and geopolitical tensions. For instance, a 10% decline in gold prices could reduce Coeur's operating cash flow by approximately $50 million annually, based on 2024 estimates. Operational challenges also persist, particularly at Silvertip, where high costs and complex metallurgy have led to inconsistent production and profitability. In Q1 2025, Silvertip's all-in sustaining costs (AISC) exceeded $30 per ounce of silver equivalent, compared to the company-wide average of $21. Additionally, Coeur's debt levels at $468 million as of Q1 2025 represent a leverage ratio of 2.5x EBITDA, higher than the industry average of 1.8x, posing risks if cash flows weaken. Environmental and regulatory pressures further complicate operations, especially at Rochester, where permitting delays have historically impacted timelines. Lastly, labor shortages and rising energy costs, particularly in remote locations like Alaska, have increased operating expenses by 8% year-over-year. Key financial figures from Q1 2025 provide a snapshot of Coeur's performance. The company reported net income of $33 million, driven by strong production of 86,000 ounces of gold at an AISC of $1,650 per ounce and 3.7 million ounces of silver at an AISC of $21 per ounce. Revenue for the quarter reached $213 million, a 15% increase from Q1 2024, reflecting higher metal prices and improved output at Rochester. Cash reserves stood at $78 million, providing liquidity but constrained by ongoing debt servicing obligations. Coeur's market capitalization is approximately $1.8 billion, with a price-to-earnings ratio of 22x, aligning with industry peers but indicating limited upside unless production or prices improve significantly. The company's 2025 guidance projects free cash flow of $150 million, assuming stable metal prices of $2,000 per ounce for gold and $25 per ounce for silver. What are the implications of Coeur's reliance on a few key assets? Concentration risk at Palmarejo and Rochester means that disruptions at these sites could disproportionately affect revenue, prompting auditors to scrutinize operational continuity plans. Finally, how does Coeur's exploration spending align with its growth strategy? Capital allocation supports sustainable resource replenishment without compromising liquidity. In conclusion, Coeur Mining presents a compelling yet complex investment case. Its diversified portfolio, stable jurisdictions, and recent operational improvements are counterbalanced by commodity price sensitivity, high debt, and site-specific challenges. The company's ability to optimize costs, reduce leverage, and capitalize on exploration success will determine its long-term competitiveness. For investors, Coeur offers exposure to precious metals with moderate risk, but careful monitoring of market conditions and operational execution is essential. I invite you to engage with this analysis by liking and subscribing to our platform for more in-depth financial insights. Thank you for your attention, and I welcome any questions or discussions.